Hey everyone, and welcome to today's Explainer. Today we're going to be rolling up our sleeves and unpacking the intricate machinery of Bharat Electronics Limited, or BEL, through the lens of their latest 2025 to 2026 financial and audit reports. Let's dive right in and decode what these numbers are really telling us.
All right, here's our roadmap for today. We'll start with the big picture, move into standalone financial performance, and then explore the consolidated empire. After that, we'll dive into governance and auditor notes, before wrapping it all up with the final takeaway. Let's get right into it.
Section 1. The Big Picture. So what's the immediate reward looking like? Well, 55 pi, that's the final dividend per equity share the board recommended for the 2025 to 2026 financial year. Now, because BEL shares have a face value of just one single rupee, we're talking about a massive 55% dividend on that face value. That is a highly significant capital return for shareholders. And we don't just have to take their word for it. Looking right here at the official outcome document from the May 19th board meeting, it's there in plain English. The board recommended that 55 Pisces final dividend, which is of course pending shareholder approval, at the upcoming annual general meeting. Now, before we jump into the heavy data, let me be your financial translator for just a second. You're going to see two terms pop up a lot: standalone and consolidated. Standalone is exactly what it sounds like. It's the financial performance of just the parent company, BEL, operating completely on its own. Consolidated, on the other hand, is the whole empire. That's BEL combined with its subsidiaries and associated companies. Keeping that distinction in the back of your mind will make these next few charts a total breeze to read. Moving right along to Section 2, Standalone Financial Performance. Just look at the sheer volume of growth in BEL's standalone operational revenue. Back in 2025, they were sitting at over 23,65,000 lakhs, but by 2026, they surged past 27,47,000 lakhs. That is a massive year-over-year jump. It clearly shows some really phenomenal momentum and heavy operational output coming straight from the parent company's core business.
But the big question is always, did that revenue actually translate into earnings? Absolutely it did. If we look at the standalone profit before tax, 2025 came in at over 7,08,000 lakhs. Fast forward to 2026, and that profit has surged past the 8,07,000 lakh mark. So that top-line growth flowed beautifully right down to the bottom line. All right, let's zoom out a bit for Section 3, the consolidated empire. When we talk about those consolidated numbers, we're basically layering these specific entities right on top of the parent company. BEL has two main subsidiaries, BEL Thales Systems and BEL Optronic Devices, alongside two key associates, GEB Private Limited and BEL III Aero Systems. These partnerships and offshoots are the exact puzzle pieces that turn those standalone numbers into a true consolidated empire. So how does all this build the final net picture? Well, for the consolidated profit, combining the parent company with those subsidiaries and associates, pushed total net profit from roughly 5,32,000 lakhs in 2025 to over 6,06,000 lakhs in 2026. The entire ecosystem is clearly generating substantial and growing value. Now for Section 4, Governance and Auditor Notes. For this part, we're drawing directly from the independent auditors, RAO and MR. It's incredibly important to establish this credibility, right? Because auditors, well, they don't just check the math. They check how the company is structured and managed. And in their Other Matter section, they flagged some specific compliance exceptions that any serious investor really needs to be aware of. Here is exactly what the auditors pointed out, translated from all that dense legal jargon into some clear bullet points. As of March 31st, 2026, the BEL board actually lacks the required number of independent directors, and it lacks an independent woman director. Technically, this puts them in non-compliance with CB Regulation 1711, with 6 total independent director vacancies just sitting open. Now, why does this matter to us? Well, independent directors are absolutely crucial for providing unbiased oversight and protecting minority shareholder interests. But the auditors do provide some really critical context here. Quoting directly from the report, all the vacancies were notified in time to the government for filling up, and the matter is under consideration of the Ministry of Defense. So BEL has essentially done its part by notifying the authorities. The administrative ball is currently sitting squarely in the court of the Government of India to finalize these appointments. Which brings us to Section 5, the final takeaway. Here we have the core contrast of this entire 2025 to 2026 report. On one hand, you have stellar financial momentum.
I mean, we're looking at a company firing on absolutely all cylinders, posting record revenues and surging profits. But on the other hand, you have corporate governance gaps, specifically those administrative delays resulting in 6 board vacancies. It's a pretty fascinating duality, really. Super high operational performance running right alongside this structural incompletion. Which leaves us with this final provocative thought to consider. When you're looking at a giant like Bharat Electronics Limited, how do investors balance stellar financial momentum against noted corporate governance gaps? Does the sheer earning power outweigh the missing independent voices on the board? That is the ultimate question the market is going to be digesting. Thank you so much for joining me on this explainer today. I really hope this structured look helped you grasp the true picture behind the numbers. Keep learning, keep asking questions, and I'll see you next time.